Good morning, traders. I'm Greg McKenna, Rockets Markets Morning. I'm on the road today, and I have forgotten to bring my my webcam and the mic. So I've got a headset on, and I'm using the little camera in the screen. So I do apologise, but plenty of content to talk about. Italy was obviously in the news last night. Borgi made his normal Eurosceptic comments about Italy being better off outside the euro. That set the cat amongst the pigeons. But the markets were already a little bit concerned about this 2.4% cap. We've got Italian bonds blowing through the roof. We've got the spread to Germany blowing through the roof. And as a consequence, euro came under pressure. It fell down to about 115, sort of figure 05, before bouncing back and is at about 115.50 now. Sterling got hit. Dollar yen was on its peak. The Aussie was down at 71.60. We had stocks off. It was all getting very funky, pardon me. But the fact that euro could hold 115, that De Maio and Silvani, walked back, and Conti walked back Borgi's comments and said that there is no plans to renounce the euro. There is no plans for Italy to leave the EU. Certainly settled things down a bit, even though the battle with Brussels, between Rome and Brussels, looks likely to continue. There were some quite pointed comments about the Italians. Anyway, in the US, the Dow made a new record high, which is kind of amazing given, where the DAX and the CAC and the FTSE MIB and even where the S&P and the NASDAQ were. But that's the idiosyncrasies of a 30 stock index, which is calculated on price and points rather than index weighted. So we did see the Dow have an update. The Aussie market recovered from its lows. It was up 9. It got down to 61.05 for the SPY. 60.89.90 is the level to watch and the target for me. Copper was up 1.23%. That certainly helped the Aussie dollar, which is at around 71.88 now. As I said, euro's about 115.5, and dollar yen now is about 115.60 odd. Sorry, what am I talking about? 113.60 odd. So that's where we're at. Anyway, let's dive straight into the charts and we'll talk about where things are, because there's some big issues going on. Partly, here's the euro, by the way. Part of the reason I think that the US dollar is off its peaks is that Robert Kaplan and Jerome Powell, when taken together, what they had to say last night, weren't quite as hawkish as they could be, or at least how the market wanted to read them, which for me as a trader and a behavioral economics and finance guy is the key thing. What we heard from Powell was more hikes because it gives certainty. It's actually what keeps inflation in check. If we get an inflation breakout, people know consistently that we're going to act on both sides, so thus the symmetry, and therefore inflation's starting to moderate because people aren't going to panic. Consumers aren't going to panic. Business isn't going to panic. That inflation's going to get away from them. They let the reserve, not the reserve, the Federal Reserve, do its job, and it keeps inflation. So that's essentially the Powell mantra for the moderation in inflation. Robert Kaplan then said that he thinks that rates need to keep rising until we get to neutral, which he said is about 2.5% to 2.75%, and then rates will hold. So what he's saying is a few more hikes and then pause, which was the message that we got before that week or so before the blackout from the last Fed meeting. Interestingly, tonight we get Esther George, Lael Brainard, and Powell again, so there is some risk. But from a purely technical point of view, what we got here with the euro, we had this nice little shape to this move higher, a nice little flat top around that 118.50, 30.50 region, couldn't get through. We broke the trend line, and we've had a run. Now, we've had a run down to 115.04. Now, the reason I've got that as the 100% is because I was trying to see where the 4 hours might bounce to. And if you have a look at the MACD and you have a look at where we are now, if it can get through that level there, which is about 115.69, so not far, you could get a garden variety retracement back into this sort of 116.20 kind of region on the on the basis of the 4 hour charts. But if we go back to the dailies, you can see if I was to draw a Fibbo from there to there, you would see that not only is just below the 100% retracement of this latest move, but it's also 61.8% retracement of this move. So if you get down through 115, then 113 becomes the target. In terms of dollar yen, it's got this very steep uptrend, might have had an interim peak there. Certainly, we've got the stochastics in oversold territory. We have got the MACD not giving a signal yet. We're at least a day away from the MACD giving a signal on the daily bars. On the 4-hour bars, then yes, the MACD did give a signal. It gave a signal up here, and it does suggest a retest of the trend around 113.28. And it hasn't been perfect in its, because it's been redrawn. If I had it previously drawn there, but then we had that dip, so I've drawn it there. So I would argue that somewhere between sort of 40 and 25 is probably where dollar yen would find support. And if it broke down through there, then I'd be looking for a move back towards this level here, which is about 112.60 or thereabouts. So keep an eye on that one. In terms of sterling, the civil war in the Tories just continues, folks. It's awful to watch. Whether you like Brexit or don't like Brexit, whatever your political views are and what you think of Europe and all that kind of thing, the mess the Tories are currently making appear to be making is troubling for the economy, for the citizens, because that's, at the end of the day, that's who I care about. But anyway, enough editorializing. What do we got? We've got an uptrend that's broken. We've got a downtrend that's started. And then the question is where to next? If we drop down to the 4 hours so you can get a good look, remembering that the high was just below the 38.2, it does suggest, like the euro, that we could see a little bit of short-term upside, but you'd be looking at a just in the very short term. Remember, two touch trend lines are only tentative. Perhaps a run back to 130.40, something like that, before another reversal. ADP jobs in the States tonight, plus all those services PMIs. If there's been one thing over recent weeks, I guess months, I should say, services PMIs have generally come in better than manufacturing PMIs. Services are often nationally based, so they don't get impacted by trade as much. Although, of course, services are prone to hits of confidence as well. This is the Aussie dollar now. Multiple month trend line, multiple touch trend line, a very, very important and good trend line. False break after the Fed reversed pretty quickly, and we've seen the big pullback. 73.14 down to 71.60 last night was the sort of the 4 or 5 day move, a big reversal by anybody's language. 71.40 had previously been a reasonable over here. Had reasonably been a reasonable level of support. We haven't got there yet. Will we get back and test it? It's a real chance. If you go down again to the 4 hours, it's not quite as overdone as the others. It would have to get up through sort of 72 figure 10 for me to get excited for a bigger move. Yesterday's RBA on balance, I guess, they're not expecting, they still expect wages to increase, but they don't expect the unemployment rate to fall that fast. So we won't worry too much about that. And they are worried about the housing market. So to that extent, my sense is then that the RBA is mildly dovish and a mild weight potentially on the Aussie. But all other things considered, with the rally in copper and those sort of things, and oil to a certain extent, and EMs, the angst getting driven out of EM for a little bit is helpful for the Aussie. CAD, awful orange color, I apologize. So we've broken down, consolidating, had an inside day yesterday. That doesn't tell you anything. What it does tell me, we're out on the outer edge of the Bollinger Bands. And remember, when you get to the outer end of the Bollinger Band, that just reflects that you've had a move that's gone very far, very fast. Depending on how far and how long the move's gone is important. But for the moment, we've had an inside day, which means yesterday's parameters, the high and the low, so 128.85, and then 127.81. We're at 128.22, so 60 up, 40 down roughly. They're the keys for CAD. If it breaks either side of that, you'll see a reaction. Kiwi still drifting lower. Looks to me like it's going to trade back down towards 65 cents at some point. Gold had a stonkingly good rally. Now, I didn't really write about gold in Markets Morning this morning, but we were right. 1188, yesterday, 1183 a day before, and now we've ripped and roared, and we're back up at 1204. I'm not exactly sure what's behind this move, but from a price action point of view, the next level to watch 1210, and then we've got this 1215 to 1220 region as something to watch. You know, that could be a key area. It's naturally a key area of resistance. We had it here, it was support. Now it's resistance. If it can get up and through there, then it can really run. 1240 would be the number that changes my outlook for gold. But that's a really interesting move and something to watch, folks, because copper too managed to find a bit of a bit of a wild night, copper, and still a bit messy chart as you can see. But what I've got is I've got a number of different pardon me, regions and levels, and we're still ratcheting around in this range. So what that means is that the short-term players have got the ball. Longer term players have stepped back to see what happens. Still a lot of uncertainty about emerging markets. Still a lot of uncertainty about China. In Markets Morning this morning in the written piece, I highlighted something I'd forgotten to mention in the last 2 days. I kept meaning to do it and then forgot that the Chinese are censoring the ability of the press and others to report on weakness in Chinese data. They're not fudging the data. There's no suggestion of that. But the New York Times says that they have said don't over-egg the weakness in the data, which is really interesting. Tells you that we are going to see more weak Chinese data. Also, keep an eye on the yuan. The yuan started to weaken yesterday. In terms of the offshore, it's not quite there. My eyesight's not so good. 688. If it gets through sort of 689, 690, then 694, things could get really interesting for copper and for other currencies. In terms of WTI and crude and Brent, I should say, my question is, are they tired? So we've got a range high over here. We've got a move here. The targets then become the 138 and the 161.8. What do we got? We've got it at the 161.8. It's backed off. That's roughly the range high. Stochastics overdone. Too early to say that oil has had its run, but potentially this is a good place for a pause to test the rally, to look for better levels if you're still a bull. Worth noting on the fundamental side, Venezuela's having trouble. This is a good indication of what sanctions can do. Venezuela, there was a boat crashed into a port in Venezuela. It took the port or an amount of its production or its loading capacity offline. The Venezuelans are putting that back together. They've got to build a fence. They couldn't get the parts for the fence because the Americans sanctions and the money flow, those kind of things. Then you put in what's happening with Iran, and you can see why the market is bid. As I said, Goldman Sachs. Last week we were talking about them saying 80, 90 now. Now they've said it could be higher above 90. One of the other investment banks, I've forgotten who, says that too. So this is a pause within an uptrend. How far it goes, I am not sure. It's getting pretty steep. You know what I think about steep markets. My expectation would be that if we don't take out last night's high, we'll come back towards sort of 73, 70. Now, in the grand scheme of things, with the ATR up at 150, that's only a day's range. So you could easily do that for WTI. In terms of Brent, I should say the API data, those falls are despite the API data being not as big a draw, about half the size, at just under a million of what the market expected. Again, we're up at a 168. Again, we've started to go steeply. Again, we could draw this this trend line. It's kind of tentative. Sorry, that's not in the right spot. It's kind of tentative at the moment. I'd want to see a retest to prove its strength or not, as may be the case. But again, stochastics overdone. MACD looking at slightly extreme level. Not got a signal yet, but something to certainly watch. In terms of stocks, the S&P. Not really much inside, tiny little day in terms of range. For our own market here in Australia, looking a bit wobbly. This is the 4 hours. I'll go to the dailies quickly so you can see. So 61.05, 60.90, so the move down to there. We've got back to, we couldn't hold above 62.22. Remember, we talked about that. So what have we got? We've turned south. That suggests a test of 60.90 at some point anyway. If 60.90 breaks, you've got about another 100 points in it, but something to watch. 60.90 has to break first. In terms of the DAX, and I haven't even looked at a DAX chart this morning, what do we got? We've got, so the DAX was off its lows, and partly because of what happened, obviously, in Europe. Still having rolled over, though. It'll be interesting to see. I'm keeping an eye on this. Keep an eye on the S&P. If the S&P does not continue to rally, it's very hard for these other nations, developed world anyway, to continue to rally as well. But certainly something to keep an eye on. And last but not least, Bitcoin. If I can find my Bitcoin chart, there he is, or one of them. Basically going nowhere. You've really got to drill down to the 4 hours for Bitcoin to see what's going on there. There's a lot of smoke, fury, and hype about Bitcoin in the press and people trying to hype it up at the moment, but all we've really got is we've got a medium-term downtrend, a really good support. It's trapped between the two, and unless or until it breaks, it's just trading a range, and those ranges are good. They're 1%, 2%. So there's plenty of action there for crypto traders. Of course, there are others, Ripple and others, which Ripple in particular has been more exciting recently, but exciting if you like kind of volatility, which I used to when I was in my 20s, but not so much when I'm in my 50s, although I do really love a market that goes down. Anyway, that's it from me today. It's market services PMI day, so keep an eye on that. ADP employment, lots of speeches, 3 speeches from the Fed. And if any of you haven't had a chance to listen to my chat with Anthony Crudelli on Futures Radio, it's pinned to my Twitter feed at Gregory McKenna. Someone else had Greg McKenna by the time I signed on to Twitter, so that's why I'm calling myself Gregory. Please feel free to call me Greg. But I have a listen to that. I think he's really got to the nub of how I trade and how I think about markets and that kind of thing. And if you like the written word as well, sign up for the written word that I put out each morning between 8 and 8:30. Anyway, enough gibbering from me. Have a great day's trade. Plenty of opportunities there, as you can see. Inside days, reversals on the 4 hours within an overall downtrend. Lots and lots and lots of action between now and when we get non-farm payrolls Friday night. Bye for now.